Hi everyone, welcome to one of my first stock analysis. So a lot of people ask me actually to go through a process that I go when I buy a stock. So I decided to go with one specific company that I actually really love. And I have to say before I start that all the stuff I'm going to say is my own personal opinion. It's not representing anybody else, not the bank, nobody else except my own. All the data that I'm going to provide you are actually on the website of the company. I actually go very much deeper into my analysis, but I cannot show you what I cannot actually provide information for. So all the numbers I'm going to show, if you go to the website of the company, you can actually verify all the stuff. So with what's happening now, everybody's aware of what's happening with Donald Trump and the tariff. And one of the stock that we own in the CL Discipline Growth, the NBN 1550, it's actually Group ADF, Group au Dragon Forgé. So the ticker is DRX in Toronto. So this is a stock that I've started purchasing a while ago and I own in my mutual fund. And again, it's public information, so you can go to Morningstar or Globe and Mail and find the assets that I own. So it's one of my top positions. I own 650,000 shares of the company. So if you look at the float right now, that's about 30 million shares. Again, those are rough number on the website. So they have about 40% of the shares that are multi-voting, not the one that I own, obviously. They're owned by the founders and the family and employees. They're actually 10-to-1 votings. The other shares are 1-to-1. Those are the ones I own. So they have about 30 million shares. I own over 600,000, 650 as of now. And as disclosure, I did not buy them recently, and I won't buy or sell in the next few weeks, because if I talk about a stock, I can actually start front running or do stuff like that. Because as you are aware, I'm an active portfolio manager. So they own about 30 million. There's about 30 million shares. I own about 2% of the company. So this is a company that has a warehouse or a factory of about 650,000 square feet, and they do metallic iron structures. So that's why I put my Judas Priest, the metal god, because I want to see a company that does metal. So it's very impressive. I was there last week. I had the chance to visit the facilities in Terrebonne, Quebec. They have one in Montana also. So they're well positioned with all the tariff happening, because they can actually divert some of the contracts they have into the States, exempting them from the tariff. They can't do that for all the production, but they can do a bit of what they're doing for the American in the States. A lot of the sales actually come from USA. So with all that's happening right now, it could be a small burden on them. So that's one of the negative of the stock. That's why the stock got hammered in the last 12 months. So if you look, it once touched $20, over $20. Now it's trading, let's call it $8, $7 a shares. I don't know exactly as I record what the price is, but around $8 a share. So it went down a lot. As we speak right now, it's trading about 4 times P/E ratio. So I'm a value investor, okay? I like to buy cheap what I believe is going to be more expensive in the long run. So I'm going to give you my sense about the company. So Group ADF or DRX, whatever you want to call it, is trading at 4 times, again, roughly, because I know compliance is going to go look at the numbers and, oh, what do you get the numbers? Roughly 4 times P/E ratio. I believe that the numbers that's going to come out in April for January 31st fiscal year will be amazing. The guidance for 2025 might be a bit on the lower side because of the tariff and all the stuff, but they don't do small project. They do huge project. You'll see some of the pictures that I'm posting, and I got the approval from the company to post them. You can go on the website and have more pictures. They're doing big stadiums, big infrastructures like bridges and airport, not stuff you do in your own house, in my own house, but multi-million-dollar project. They actually just announced a $120 million contracts with the province of Quebec and some in Western USA. So they do big contract. It takes a while before they sign them. So on the short notice, doesn't impact the tariff. They have a backlog of over $500 million. So think about it. Their income last year was about, for 2024, 334 million, and their backlog is over 500 million. So they have about 15 to 18 months of backlog. That's if they don't sign any more contract. They have a good margin on their product, so they're trading at 4 times PE ratio, 7 times price to cash flow. That's insane. People are buying real estate at 15, 20 times income, and you can buy a very well-run company at 7 times cash flow, 4 times PE. So forget about the PE ratio, right? Because you can do accounting stuff, but cash flow, 7 times. So that means that by definition, if you would buy the company as of now, over 7 years, you would be your own company debt-free. So this is very cheap for corporation. And there's 3 things that looms above the company that I think will be catalyst in the long run. First of all, about 40% of the shares are owned by the founders, family founders, and they're multi-voting, like I said earlier. So they actually started to sell some last year. I believe, and that's my own perfect opinion, I have no information whatsoever on this, but I believe that in the next few years, the company will probably start to sell some of the multi-voting shares, thus reducing their voting rights. That's about 80% now if you do the ratio. And that would probably trigger some institutional or big private firms to actually try to maybe take over the company because the price is way too cheap. Second of all, there's a big shareholder that started to sell, was owning over more than 10% of the shares, started to sell their share last year. That created a selling pressure on the company. So over June last year to now, I don't know how much they sold because now they're below 10%, so we don't know. But they've been selling the company. So there's been a selling pressure. At one point in time, they're going to run out of shares, right? So that's going to be a catalyst on the upside. There's also a short position that went up a bit. So if the results are good, you might have a short covering. But the tariff is where everybody's dumping that company, right? But in the long run, they do huge infrastructures, and the capacity for the American government to actually supply that type of work without a Canadian company helping them is over 100%. So they need them in the long run if they want to build the infrastructures. So all the negative, in my sense, is in the stock. None of the positive is there. So if the result comes out well and the guidance is not too bad, you could have a huge pop on that stock. I believe the stocks is easy at 3 to 5 times in the next 5 years. Because again, at 4 times PE ratio, it's way too cheap. And I believe that the earnings will come even better. So that might actually be a 3 or 2 times ratio. Look at the numbers in 2024. The sales were up 32%. The income was up 152%. So that's insane. And I believe they will even be better next April when they come out. So if you look at the enterprise value at about $115 million, if you take the market cap minus the debt and minus the cash, they have tons of cash. They've been buying back their shares at about 35,000 shares a day. Think about it. They have 30 million shares. They're buying back tons of their shares because they have tons of cash. They have capacity in a factory, so if they have more contracts, they don't have to expand. They could, but they don't have to. They have one of the biggest robots to automate actually what they're doing. So labor is not a big issue for them. They can actually bring more of their of the capacity without employing more people. So they on pace to make over 100 million income next year. And they have an enterprise value of 115 million. That makes no sense whatsoever. So this is the type of stocks that I love. Very, very, very cheap. Actually, you know what? Nobody's looking at it because at such a small market cap, institutional are actually waving off the backhand because it's too small for them. And there's only about 60% of the float, right? Because the family owns 40% of the shares. So there's about $150 million of market cap floating. So a lot of the big mutual fund, institutional are not looking at that stock. So if a few institutional funds starts to buy, that things could pop easily. So that's pretty much how I look at it, right? The return on equity, by the way, last year was 26%. Think about it. Those numbers are insane. So those are the types of stock I look. With what's happening right now, the stock is getting trashed by the market. Not about a lot of volume, but people are unloading everything, right? Everything. The banks are going down. Every industrial. If you deal with Canada or base in Canada or actually, you know what, support Team Canada, you're getting killed this week. So those are the positions that I like to add. I'm not going to add to that company because I'm talking about it and I own a lot too. But this is the exact type of position and stock that I like to buy. I know and I strongly believe that in the next 3 to 5 years, this will be a company that's going to provide a very good return. But in the next few weeks, I have no clue what's going to happen. If the stocks keep getting plump, I'm going to probably buy more. So take a look at it. DRX. It's a great company. The website is great, so you can have all the information. And in April, they're going to release their number. Follow them closely because I sure will. Thank you very much and have a great day. Oh, by the way, please subscribe to our channel and you could share to anyone. The more the merrier. Have a great day.